All right, good evening, everyone. I will just we'll be getting started right now. So we'll begin on the call today, like we normally do. My name is Ahimari Wisdom. I have Tokwe with me, one for analyst. We've been on this call a couple of times together, so he's going to be with me today, and we're going to be looking at the markets and seeing what we can glean from the signals the market is giving us. Basically, we're looking at opportunities we could be trading with from now going into the rest of the week, right? So something is happening tomorrow, and I want to begin from that, and it is the FOMC. FOMC is tomorrow. FOMC means the Federal Open Market Committee. So it's um, the interest rate body of the US, of the United States, right? So you can see the numbers here where we see the meeting is happening 7 p.m. GMT +1. And then the data here is what we had previously compared to what we expect. This is the forecast, right? We have 4.25%. It's called the federal funds rate. That was for last month, I think. Yeah, so for this month, you can see the expectation is that the rate is going to drop. So when that happens, every time interest rate data comes out, the market reacts very heavily to it. Okay, so we're expecting to see volatility across all USD-based currencies, currency pairs tomorrow, not just currencies across assets, across USD assets, assets that have a bearing with the USD tomorrow. We expect to see volatility across. So that's the major event that we're having for this week, the number one event. Another one we're having also to be on Thursday. This is going to be the BOC interest rate, BOJ interest rate, BOJ policy rate, basically. This is also interest rate data. So we're having a lot of interest rate data for the week. We'll have one for Canada. That is for tomorrow, Wednesday. Then also we have for the US, which is FOMC tomorrow as well. We have one for the Bank of Japan on Thursday, and the one for the ECB, the European Central Bank, Thursday as well, right? So this is something we're expecting to get a lot of volatility from the market. Okay, so keep an eye on this and keep watch. This can be a very high impact event that you want to trade, right? Depending on the instrument you're trading, whenever you're dealing with USD data, there are some currency pairs that are usually recommended to trade. Gold is one. Gold can be very volatile though. And the thing is that gold can give you very quick profits. That is it for gold. So even whether you're buying or selling, as long as you want to scalp, you're ready to scalp the market, take those profits and you leave, then it's going to be good, right? That's basically the way it is. Then for currency pairs like Euro USD, Euro USD is likely we're likely to see further upside on the Euro USD, right? We're expecting to see further upside on the Euro USD, and we're already expecting from the analysis we did on earlier in the week, we're already expecting that Euro USD is going to rally all the way to the resistance level of 1.17200, right? So that's our projection. That projection remains intact as of now. Okay, remains intact as of now. And then we're also expecting we're expecting that to stay in play because the effect of that interest rate cut on the USD is usually negative. So the effect of rate cut, interest rate reduction on the USD is always negative. And whenever the dollar is selling, the Euro USD is going to be the one to benefit from that sell-off, right? And then it will buy, thereby benefiting from that sell-off, right? So this the projection we have for a buy on Euro USD remains very intact. So we have that remaining intact because the dollar is expected to weaken even further. Okay, so you can see the dollar index has been selling from this level up here around the 98.900 resistance level here. It's been selling, and we expect it to continue to, push downwards. Expect it to continue to push downwards. And once that happens, or once that is happening, we're expecting to see the opposite effect on the Euro USD, the opposite effect on the Euro USD, which is likely going to be a buy. Okay, so that's what I see at this moment. For gold has been really wild past few days, very, very wild, I would say. And gold has corrected much deeper than anyone has expected. It's being said right now that the correction we're seeing in gold right now is the deepest correction in 12 years, right? So gold has been really correcting very heavily. When you look at the overall trend on the higher time frame on the weekly chart basically, you'll see that gold still remains very bullish, right? Gold bullish run still remains intact at this moment, but then it's correcting. Basically, that's the way the market works, but it's just that the correction has been much deeper than what was anticipated. So it just keeps selling and selling and selling. Very, very likely we might see price sell to around the 3,800 level, 3,800 level before we see a respite for gold this time. So gold remains very bearish. For those who are looking, who've been trading gold, and you can see that bearish moves have been very good recently. So if you're looking to sell gold, a good area for a sell here, for a sell might be this. So a good area for a sell might be this. So the thing with gold is that right now the volatility is very high, and just like you can make very good profits, you can make very, very steep losses very quickly. All right. So that's the reason why you want to be very conscious, very cautious with trading gold at this time, right? But basically, if you get the direction of the asset right, it's much easier to get into, right? So this is what I'll be looking for here for a risk to reward ratio of 1 to 5 right here, right? So that's what I'll be looking for gold. So I'm looking at that for gold. For Euro USD, like I said, this buy we had some trades we entered around this level yesterday, and it made a buy to around this point here, around the 1.1666 level, right? And then we saw a push down this morning. This was a result of a flash sell-off in the US dollar. All right. So that's what I see in the market. Temitope, what do you see in the market currently?
Hi everyone. Thank you, Elise, for that quick market recap. I'll be looking at the markets from the, I would say, fundamental point of view. So, of course, in the news, we have President Trump, of course, in Asia, trying to strengthen relationships, of course, with Japan. Is met with the Japanese Prime Minister. Of course, in attendance are, of course, US businessmen and the Japanese businessmen too. In the meeting, I believe he's also going to visit Seoul before he returns back to San Francisco. This, of course, as you know, expressed optimism in respect to the US, China, US, Japan trade optimism. So, of course, Trump is trying to give confidence back to these different countries. So of course we see how that has also affected the major assets, Euro USD, gold, of course some kind of respite for the JPY as well. So let's also quickly look at the charts. Let's see how this has played out fundamentally. If we look at DXY on a daily time frame, we see price has been respecting this support region. Of course, we were, of course, at some point, envisaging price to fall as low as around 94 price level, but that did not happen. Price held all through. Let me scale down to a 4-hour time frame. Price held all through. If you look at what we have here. So of course, I'm looking at a bounce off this level. So we're looking at two possible scenarios: a break below this level to send price all the way down, or we have price come and reclaim the 100K level on DXY, which of course would strengthen the dollar. So tomorrow's rate statement should be around 7 p.m. West African time. We're looking at, of course, how this plays out, and then of course with the Trump's globetrotting, that should also, give investors some level of confidence. And then, of course, today should be day 28 of the US government shutdown. So that's also is a negative sentiment, that's been affecting the dollar. So let's move on to Euro USD to see how that has affected the dollar as well. Currently, Euro USD trading around 1.16538. So of course, price also respecting our support levels around here. So we have some level of resistance around this point. So of course, we have two scenarios that could play out here as well. Either price continues this distribution, tests the high that we had, I believe, sometime in September. Yes, sometime in September, price got to around 119. So of course, we're looking at price if dollar, still gets the beating. I wouldn't say that it deserves, but at some point, we might see price, on real USD jump as high as around 1.17. Then coincidentally, we have a lot of rate statements coming out this week. So most of the major economies would be, releasing their rate statements. And of course, a situation whereby rate is cut, of course, you expect investors to, come in. That means you're giving out money at a lower interest rate, right? So this should attract investors. People take out, go to the bank, take out money, business booms. But the first initial reaction would be, of course, I would say a downside, but eventually the economy picks up. So we're looking at, of course, that initial move of a weaker dollar tomorrow, but subsequently we'll be looking at a stronger dollar. Should the case remain that the Fed cuts rates by tomorrow. So let us also look at how that would also or might affect, of course, gold. We all know that gold is quoted in the USD. Recently, we've seen that I would say phenomenon being like I would say disregarded because of how far gold went, as high as 4,400 recently. But of course, we've seen a sharp decline or a correction to the downside. Price currently hovering around the 33941 mark thereabout. So of course, I believe this is just of course I would say price creating lower highs. Let me put it that way, something like that. So we might be looking at, of course, we saw a double top formation at the most recent high, which of course gave us an indication of a drop in price. Then a distribution, a breakout of the distribution, and then price trying to settle around here. So let me mark out this region. I'll still, of course, I'll be holding a short position that will push me all the way down to this price mark, 3-to-1 ratio, risk to reward. Yeah, so I have this locked in. Of course, we're looking at two possible scenarios. This, of course, could be, I would say, this might not play out as, of course, all of these opinions are solely ours, based off on markets research. So of course, so for any moves you are looking at, kindly make sure that you have been able to do your proper analysis, before, getting that your clear-cut buy or sell decision. So I'll be, of course, looking at price, falling as low as around 3884 mark after the FOMC minutes tomorrow. Let's see how that plays out. And then, of course, I would say considering the geopolitics, like I said, and of course, FOMC minutes for tomorrow, we're also looking out for restatements from the Canadian Bank of Canada at around 2:45 West African time. And then moving on to Thursday, we have policy statements from BOJ as Bank of Japan, and then of course main refinancing, of course, for the Eurozone as well. So of course, I also have for the Chinese yen on Friday. So it's a week of rate statements for most of the central banks, which would also, impact the market a lot. So I would advise that we also look out for the fundamental aspect of the markets, try to combine that with what we have in terms of technicals. And of course, for those that trade commodities, you have to be in the news to know what is moving that asset you are trading. So I would pass the baton back to Imari to conclude this session.
Oh, okay. Thank you very much, Dr. You see, so this is a classic situation. Do your own analysis or do your own research, right? So you can see, as I'm looking at the market right now, I and Tope agree on certain things, and then from what we see in the market, then we see things differently on certain instruments. So that tells you that whenever you have analysis like this, it's always the opinions of those who are involved, always the opinions, right? So it's our opinion, the way we're seeing in what we're seeing in the market. Like I said earlier, we weren't expecting such a deep retracement in gold, and now we are seeing very deep retracements in gold, and we're even expecting price to dip even further, right? So that gives us the idea that, hey, whatever the analysis you see, you always need to make sure that you're checking the market, understand the market, check the market to make sure that you're also getting your own perspective, your own idea as to where the market is likely going to go next, right? So I would still say that, so if we look at now, hold on, sorry. So if we look at, we're seeing, from what I said, just to recap what I said earlier, we had EURUSD, and we had the dollar index. We talked about the dollar index. We're expecting some sort of a push down in the dollar index. And then we're expecting gold to, push up into this zone and then most likely sell, right? So around the 3,900 level, 3,960 level, we should see gold begin to sell again from there, right? So gold remains very bearish at this time. We see bullishness in EURUSD, and basically that's what we expect to happen shortly. All right, so more opportunities for a sell coming to gold, more opportunities for a buy coming to EURUSD. That is what we see in the market currently. All right, so this session, we're going to, so like I said, disclaimer, this session is our opinions. Make sure that you're not risking more than 2 to 3% of your capital on any trade. And then, yeah, so we'll see you guys on the next session. And then we'll analyze the market again and see where the market is going, right? Thank you.
Thank you.